George, it's the rules around the fiscal issue where this market has got nervous, justifiably so or not.
I think, look, it's kind of an oxymoron, limited deficit spending. What exactly does that mean?
I don't know. You tell me. What's your interpretation?
And so I think the market has been discounting it all week long, and we got very close. Our European strategists, have been kind of calling for this move after the election. There was going to be a moment to be defensive. I think this week has kind of largely got us to that 160 level on the BTP versus Bunds. It could go higher, absolutely, if things were to kind of get worse from here. But we still have the ECB lulling everyone to sleep. We have the ECB still there, and as long as ECB is providing liquidity, it's going to be hard to see these deals break out. But if you zoom out and you start to look at spreads, things are very tight still. And you have 80 bips more of Treasury yield relative to an Italian bond. Go figure. Yeah,
go figure. And relative to Spain, relative to Germany, things are even wider looking at treasuries versus the rest of Europe. I just look at the situation versus Spain now, and Spain is trading pretty rich to Italy. The spread is about 77 basis points at the moment. Does that make sense? And do we have a new multi-tier bond market in Europe? Supercore, core, semi-core, periphery, super periphery? Is that what we need to sort of define this by now?
Look, it might end up working out that way, especially as we get towards the ECB exit, that we go back to discounting the proper credit risks that are out there. But I think it's probably too early to have too nuanced of a view.
Gina?
Well, I mean, at least as far as the equity markets are concerned, so far, to me, this is just removal of excess optimism that built up toward Italy for over the last year. I mean, this was the Italian equity market dramatically outperformed the broader European equity markets. And really intriguingly, the sectors that were in Europe that were typically lagging, the banks and the autos and such, were outperforming in Italy. So you had this environment in which optimism was rising pretty rapidly for Italy, and now this is dismantling some of that optimism. And, frankly, Italian stocks made new highs just a few weeks ago, where the rest of the world's large cap equity markets were still kind of struggling in a corrective process. So this so far is just a normalization. How far does it go? The technicals are breaking down pretty quickly. So there's probably a little bit more room to the downside for Italian equities, but it remains to be seen. What's the real action to come out of this? So far, we're just speculating as to what this government's really going to be able to accomplish.
And what's the reaction from the ECB? We caught up with the Vice President, Vitor Constantio, who says the central bank is watching the situation in Italy very closely.
We have to monitor that situation, of course. It's a change from what has been happening recently. The problems of Italy are the same as known by everyone.
Noah, here's the situation for an investor. If you take a negative view on Italy now, you're going to push that through the equity market, the bond market, where the ECB is still a massive player, or is the only place left to really play it through FX? And is that what we've started to see this week? Not just a stronger dollar story, but a weaker euro story start to come through with a little bit more oomph?
I think that's right, and I think that's the natural place for it to go. And again, from an equity market perspective or from a U.S. perspective, like the contagion fears I don't think are there. EM, maybe there's some blowback from this dollar strength, but think about this in the context of the body blows we've taken over the last post-Great Financial Crisis period. This is small compared to European growth worries when it was Greece and Portugal. Yeah. It's really much smaller, and the EMs are much healthier than they were going back to the previous EM crises. But could there be some dollar headwinds, and could they kind of focus on the large cap, globally exposed stocks that have done a little bit better in the last couple of months? I think we've seen that already in Russell S&P performance. So maybe that extends a little bit on the margins. Maybe it's a little bit of a headwind for U.S. stocks.
We'll get to the